Hello, everybody, and welcome back to yet another edition of the Wilton Report, Princeton's only real estate podcast and videocast. You can check us out on YouTube at the Wilton Report. We are also on Spotify, Google, and Apple Podcasts. We are everywhere. So let's get to it. It's been a few weeks since we last updated you as to what's happening in the market. It's the end of the first quarter. It's a pretty amazing time in the market, not just in Princeton, but statewide, nationwide. It's really an interesting market. I did have a bit of company news. So for those of you who've been following along, hopefully, you know, I love to keep my audiences riveted. So you know that we have rolled out a real estate company, myself and my partners, Vanessa 𝐂𝐿𝐎 and 𝐂𝐎𝐍𝐍𝐄𝐂𝐓. We started Queenston Realty together. We started Princeton Abstract together, which is our title company, which is agent owned. So agents, if you don't have title shares, call us, you should. We rolled out a property management company called Princeton Property Management Services. And we are very happy to announce that we have another offering for realtors, Queenston Referral Associates. So what is it? It's for realtors who no longer want to carry an active license. They want to put their license in a referral status, but still have the opportunity to get a referral fee on a commission. It is also for people who did get their license and are just not ready to go to an active status. Please check it out at queenstonreferralassociates.com. It's a pretty cool offering, very clean, very easy to understand in terms of what we offer. Referral Associates, I think it's one of the best platforms in New Jersey, if not the best. Well, I'll just say it's the best because it's ours. So I want to kind of bring you to the attention of this guy, Lance Lambert. It's somebody I follow on Twitter. His Twitter handle, I think as it's called, is @NewsLambert. Pretty much dedicated to real estate. He's got 49,000 followers. Interestingly, he is, you know, he's a good guy. He seems to take a very sincere interest in what's happening in local markets because I will comment and post on his threads and he will ask questions. So a very smart guy, very focused on real estate. He posted an article in Fortune magazine titled "Home Sellers Go on Strike," right? So what does that mean? That means that there is no inventory. So the red, if you look in the upper left-hand corner of the screen, so for those of you not following this on YouTube, I will walk you through the numbers. I always highly encourage you, if you're looking to kind of look at the data, check us out on YouTube at the Wilton Report. The red is 50%. So New Jersey is all red. Southern California is all red. The east coast of Florida, red. The west coast of Florida, red. The central part of Florida, kind of neutral. Obviously, I'm not saying this disparagingly. The flyover states, neutral. So, you know, there are a couple of pockets where inventory has escalated. Austin, Texas, I believe it's 300% more than it was last year. But again, you know, that's called the California of Texas. You have a massive influx of people moving into Austin, Texas, very cool city. So there are pockets in the country where inventory is up. But if you look at it, it is not New Jersey. New Jersey is red, 50% down. So looking at the data, why is this happening? I call it the 3% Club. And I met a lot of 3%ers at an open house on Sunday. They are Princeton homeowners who have a mortgage of 3%. And you know what they're not going to do? Move and take a mortgage for 6%. They just don't want to. So let's look at the overall data. 349,284 homes were listed for sale in March 2023. That's below the 437,270 listed in March 2022, right? And that was, to Lance's point, and he's right on the money, right? That is a low supply. The overall number in March 2019 was 478,000. So that is a massive drop nationally in inventory. It's massive. So again, his title, I love it. Sellers have gone on strike. So one of the biggest financial perks of the pandemic was cheap money, low interest rates. A lot of people refinance, locked in a lower payment. Good for them. Problem is, fewer homes are coming on the market. So again, if you look at this particular graph, March 2023 is well below, again, this is from realtor.com and, Lance's article in Fortune, well below anything trending in the last, 7 years. So we are in an incredibly constrained supply mode. This is, again, the active housing sale inventory for sale in the Philadelphia, Camden, Wilmington region, of which Princeton is a part. We tend to align, statistically speaking, with the southern half of the state. But again, we'll get into the local Princeton numbers. But the overall number in 2017, there were 22,953 homes for sale in the Philadelphia, Camden, Wilmington, PA, New Jersey, Delaware, Maryland region. We're down to 7,900. That's 10,000 fewer homes for sale than in 2017. That's insane. And that's just the southern half of the state. That doesn't include some of the most densely populated parts of the state, Bergen County, Hudson County, et cetera, et cetera, et cetera. So what's going on in Princeton? Because I know for most of our viewers and listeners, it's Princeton or bust, as they say. So let's take a look again. I'm going to encourage you to flip on YouTube just so you can keep track of the data. I will walk you through it. So listings, the number of homes that have come to the market in Princeton year to date is down. Last year, we were at 98. This year, 76. So again, if you take an economics class, they're going to tell you as supply goes down, prices go up. I could pretty much wrap the broadcast there, but I won't. Because the data is pretty staggering. Closings. This is like an amazing number. Okay. So what does this mean? Last year, 67 homes closed in Princeton through the first quarter. This year, 36. That is crazy. So what does that mean? It means there's a lot of hungry realtors out there. It means there's people not earning as much money. I would say brokers are, not earning as much money. Our business is fortunately up over last year. So what does this mean for the brokerage environment? I think you're going to see consolidation. You'll see brokers closing offices and consolidating on offices because there's simply not enough volume in the pipeline. What does this mean for buyers? This means this. I had an associate on my team, the Wilton Group, over 30 offers. They presented an offer $50,000 over the asking price. There was over 30 offers on the house. They didn't get it. That's what it means for buyers. That was in southern New Jersey, but we'll kind of focus in on Princeton. So sales volume last year, 70.27 million. This year, 47 million. So there's just less volume in the market overall coming through. So this is where it gets interesting for sellers and unfortunately for buyers. So again, a couple of years ago, we were in a cheaper money environment. Rates were 3%, 4%, 5%, right? And then all of a sudden now they're in the mid sixes, which is historically normal. Rates are not high. They were just ridiculously low. So the Fed raising interest rates, well, that's going to correct the market. And in some environments, it has. In Princeton, on the coast, California and the East Coast, it has not. It's just we're underbuilt. It's just what it is. And sellers are hanging on to a cheap rate, so they went on strike, which I think is a great analogy thanks to Lance Lambert. But the average sale price, all styles, condos, townhouses, duplexes in Princeton, went from 1.048 at the end of the first quarter last year to 1.370 million. That's a massive increase in equity for Princeton homeowners. List to sale price ratio did drop a little bit. Last year, sellers were getting 100.5% of their asking price. This year, they're getting 96.9%, but the average price is about $300,000 higher. So I think sellers are okay with that number. Days on market, despite the massive increase, is actually down. I thought it would actually kind of trickle up. I wasn't sure. It's down just a little bit year over year. Last year, the days on market, so it took an average of 53 days to put a house under contract in Princeton. This year, it's 49. Again, there are some lingering houses that kind of screw up that number. I would say the average house in Princeton is under contract in about 4 days right now. So if you're a buyer and you want to go home and think about it, by the time you get home, get out of your car and put your thinking hat on, that house is 12 offers. It just is what it is. So the single family average sale price in Princeton last year at the end of the first quarter, $1.243 million, which is just crazy. This year, $1.506 million. So if you want to buy a single family home in Princeton, the average price is $1.506 million. It's almost a 21% increase year over year through the end of the first quarter. That's a pretty staggering amount. So when you factor in the fact that, okay, money's not as cheap, rates are 6%, you would assume it would slow down demand. It's not. The open houses are packed. We're seeing 10, 20, 30 people at open houses on the right inventory in town. So single family homes, the days on market has dropped 13% from 53 to 46 days. Again, there are some bigger numbers. I mean, there are $4 million homes selling in Princeton in a matter of days. So pretty nuts. So the average sale price for condos, townhouses, and duplexes actually went down, which is interesting. But again, there just has been so little on the market. Some of the condos in Palmer Square, the quote unquote cheaper ones, $300,000, $400,000 for a studio, have sold this year, and the bigger ones have not. So it brought the average down a little bit. Again, it doesn't matter. The increase in days on market is just a little bit up. But again, it's not because the sky is falling in that market. There was just a couple of, I would call them laggards in that market that took a little bit of while to sell. They had tenants in them, et cetera. But the average condo, townhouse, and duplex, I can tell you one came on in Washington Oaks for $700,000, a townhouse sold in 4 days. Lord knows how many offers they had on the property. Cash deals. This is one of the things that always blows my mind. 15 cash deals. So again, about 50% of the market, well, let's say 30 to 50% of the market in Princeton is cash. That is insane. So what does that mean? It means as a buyer, you're competing with people who don't have a mortgage contingency, don't have an appraisal contingency. So you as a buyer have to be very savvy as to how you present your bid. That's what that means, because you're competing with people who have a lot of cash. And a lot of this is investor money. Like, we are seeing investors come in with cash, buy single families, and put them out for rent. So why are they doing that? I encourage you to check our rental report. I just broadcast it the other day. So check it out at the Wilton Report on YouTube or Spotify, Google, etc. And it gives a breakdown in the rental market. The average single family home price in the rental market is up over $1,200 a month through the first quarter. So check out that report as well. That is all for today. The market continues to be, in a word, torrid. That means hot and dry. So there's no inventory, massive demand. So again, just keep in mind for buyers, because rates went up doesn't mean there's a slack in demand. It's not what it means. We've talked about this before. I will say it again. This business, the real estate business, is about jobs. If people are confident, they're going to buy real estate. I don't care what the rate is. The number one employer in Mercer County is Princeton University. They're building another campus. They're bringing in faculty. I was at an open house on Prospect Avenue in Riverside, listening to people talk. I can tell you, at the time I was there, there were 3 or 4 faculty members looking at that house, at the open house. That was one house on Prospect Avenue, Princeton. So we are a major job center. We have transit. We have a downtown. We have boomers moving into town because they want to be able to walk. We have millennials, Gen Z, Gen X moving here because they want the lifestyle and the schools. The schools are another issue right now. Maybe we'll deal with that on another podcast. So that is it. That is the update for the Princeton market. Thank you for tuning in. As always, you can find us on Instagram, Facebook, LinkedIn, and Twitter at The Wilton Report. Thank you, everybody.